What's up YouTube, Tim Layton here. Welcome back to another video. Today is going to be a portfolio update with my option strategy. We're going to see how that's doing, and we're going to talk a little bit about what the stock market's doing, because it is not moving as I anticipated it was going to move today. So we'll try and figure out why. As always, please subscribe, please like, and please comment anything that you want to see from my channel and anything you think I could do better. I'm trying to grow my channel and I'm trying to help you guys, so let me know. With that being said, let's get into today's video. Alright guys, so before we take a look at my portfolio and my options and we see how they're doing, hint, it's not very good. We're going to talk about the stock market and see how it's doing. Another hint, it's not doing very good. But we're going to talk about why it's not doing very good. I'm going to try and break it down as simple as I can. So we got two reasons why, and we're going to get into that right now. If you look here, oh, that's too much right there. Investors considered a fresh read on weekly unemployment claims, that's number one, and wholesale price inflation out of Washington, that's number two. So look at unemployment claims first. There was an unexpected rise in first-time unemployment filings, which means people who filed for the first time, new unemployment filings, increasing to 230,000. Now, with no context, that sounds like a lot. That sounds intimidating. But if you provide a little backstory, a little context, you'll see that that's really not that bad. I'm going to jump into this chart real quick to show you guys why that is. So if you look at the last few weeks we've had, 205,000, 206,000, 200,000, 207,000, and now this week 230,000. So where do we want to be at? Well, simply, we want to be at pre-COVID levels. We're trying to get back to normal, what we were before COVID. So if we jump over this big spike to pre-COVID levels, we'll see that 200,000, low 200,000 is the average. With fairly regularly, February 2nd, no, there's another one in January 26th, April 27th, December 7th, fairly regularly, we jumped over 230,000. So why are people freaking out? 230,000 is still pre-COVID levels. That's a good question. I don't know. The stock market always tends to overreact. And these news articles don't help because they don't tell you that 230,000 is still pre-COVID levels and 230,000 isn't bad. They just say 230,000, unexpected rise. It's fear-mongering, it's scaring. And people get scared and people sell their stocks. Now the second thing, and I actually had to do a little bit of reading on this to figure out what it was. Right here, the Bureau of Labor Statistics December Producer Price Index showed a 9.7% year-over-year increase, making the biggest jump on record in data going back to 2010. That sounds terrifying. But what is the Producer Price Index? What does that even mean? I'm sure you guys have heard of Consumer Price Index. It's been all over the news. We've been watching it this whole year. It's inflation at our level. As the consumer, as the buyer of goods, it's what we notice inflation as. When I go to the store and I want to buy groceries, or when I go to buy a new car, Consumer Price Index, consumer price inflation, tracks what I'm going to spend extra due to inflation. However, Producer Price Index, and I'm sure you can guess it, Producer Price Inflation is the producer of these goods and what they have to spend extra due to inflation. So a little example here, let's say you want to go to Walmart, you want to buy an apple. The price extra that you have to pay now as opposed to last year, let's say it's 10 cents. That's consumer price inflation. However, producer price inflation is the price that Walmart had to pay extra to get that apple, and even further back, the extra cost that it took the farmer to produce that apple. That's producer price inflation. Now you see that it showed a 9.7% year-over-year increase, biggest jump on record. That's scary, right? But if you were to click on this little hyperlink right here, which not many people do, you're going to see that in December it only increased 0.2% from the prior month, and in November it jumped 1%. And then if you keep going a little bit farther, you're going to see that this mixed report illustrates that inflation remains elevated, but the underlying price pressures are showing signs of moderation. meaning that from last month 1% jump, this 0.2% jump is less pressure. It's still going up, but it seems like the pressure's coming down. Inflation might be easing a little bit. This might kind of be the peak. That's what they're saying in this article. But in the main article, they're not going to tell you that. And then you'll also scroll down here and you'll see that median projections in Bloomberg survey of economists called for a 0.4% increase and a 9.8% annual jump. So we beat these targets, but again, you have to click on the hyperlink for that. They're not going to show you that in the main article. They want to scare you. So neither of these things are that bad. The market's overreacting. In my opinion, I think it's all right. With that being said, let's jump into my portfolio. Alright guys, jumping into my portfolio, it's not looking too hot. I am currently sitting at $48,000. If I want to look on the bright side, prior to this little spike we had the last 2 days, $48,000 is my previous all-time high. So I can't really be mad at that, you know? However, it still is upsetting because I had 60 grand. I wish I could still have 60 grand. What's even more upsetting is that I actually planned on selling as I saw it dropping. If it got close to 50 grand, my portfolio, I was going to sell out of my options because I didn't want to drop below 50. But unfortunately, I was on the phone, and when I came back, I was at 48 grand. I missed it. There was nothing else I could do. So what I decided to do was right at about 120 to 125, my options value. I decided to buy the dip. I think I had 70 contracts. I bought 30 more. That way, if it goes back up to 150, I'll make a lot of my money back. Currently, Robinhood is having an issue where it won't pull up my options, so I actually can't show you guys that. But you can still see that I have 100 contracts. Yeah, that's really all you can see right now. But my portfolio is not doing too hot. I'm really hoping with the news that I shared with you guys, why the stock market's dropping, that the last hour of the day here and then into tomorrow, the market realizes they overreacted. I can make some of my money back and sell out of these positions. That is my goal, to either sell out of the positions today or sell out of them tomorrow at the latest. And then again, if I want to get back into new positions, I can, but I just want to be out of my January 28th options. So that's pretty much it for my portfolio. I'm down a lot of money. It is what it is. Thanks for checking it out. Alright guys, that's going to be it for today. As I said yesterday though, tomorrow will be the last day for the options that I currently have. Up or down, I will be selling for February 4th to February 11th, somewhere in there options. I really hope that the market can come back tomorrow because I think it vastly overreacted. And I'm currently kicking myself for not selling my options when I was up $15,000 to $20,000. So thanks for watching today's video. Don't forget to like and subscribe, and I will see you guys tomorrow.